And we are live. Ready, Jody?
Ready.
Ready for this?
Ready.
All right. So as always, go to coreteamhawaii.com here. Go to the bottom, and fill out the contact form for any real estate needs you have. Gone on like 4 listing appointments last week. So anyone needs to sell their home, let us know. These were in Ewa Beach, Honokai, Kunia, Mirirani, and was there one in town? There's one in town. So more of a leeward week, actually. And then surprisingly enough, one of my clients said, "Oh, it seems like you sell, more east side." And I was like, "Oh, interesting." But we're all over the island. Admittedly, I'll go to my map where we don't sell a ton. And we have sold some, but where we don't sell a ton is like this Kahuku area. But nobody sells a ton. Do you know an agent that's their specialty?
No.
I've heard of one who specializes a little more over here, but if you specialize in that area, you're also just not selling much real estate. So to be like, I specialize in Kahuku, it's like, well, you can't sell that much real estate then. So if I'm a buyer, it wouldn't be of greatest concern to me. Our island is small enough that the best agents who do the most populated areas can easily go out there and be subject matter experts.
Yeah.
Today we're going to talk about rates. Rates have not gone in a good direction. We have some of your leftover questions from Brenda Wood and S.Y. Maiha or something. Well, let's start. Jody's going to talk about rates. They're actually the worst they've been in a while. Not as good as they were, however you want to frame that. I already answered Brenda's question in the chat, so I'm going to start with SY or Psy, but we'll get to Brenda's. What percentage commission are buyer's agents actually receiving now? So if you're not familiar, what he or she is saying is, I heard that there was all this class action lawsuit stuff, and the rules changed August 17th nationally, where a couple of things happen. We can't advertise as seller's agents. We can't put the cooperating commission or the credit. The buyer's incentive can't be marketed on the MLS like it used to be. Mm-hmm. And as buyer's agents, we have to have a buyer's agreement. It used to be optional. Now we have to have it. Now, there were some states like Utah, I believe, maybe Idaho, I don't know, Utah, I believe, New Jersey, one of those Northeast states. There were some states where the buyer's agreement was required because they figured, if I have to have an agreement to sell your house, or I can't do anything on your behalf, why is it different on the buy side? So that's not really that shocking to me. The fact that you can't market the commission is not a big deal. But it doesn't mean that you actually had a listing appointment and we're bringing a new listing to market where this became a topic of conversation. You see a lot of closing statements. Mm-hmm. What do you see, buyers agents? Has it changed? A little more, a little less?
I haven't had a buyer pay a buyer's agent's commission yet.
Not once?
Not one.
We had one that brought a portion, a small portion.
I had one that covered like 0.5%.
Yeah, was that with us? Probably. Yeah, that's what we had. We had one that covered a small percentage because the sellers couldn't or wouldn't pay for that small portion, mm-hmm. and the person had agreed. They're like, no. And I'm pretty sure it was VA actually, which would be one of the last loan types you'd expect to see that with. Mm-hmm. So what you're saying is, because Jody being loan officer, she doesn't only work with us, and so if we do 70 buyers a year, she's probably doing 70 plus, a couple hundred more. And so you see more closing statements, more settlement statements than I do. And nothing's changed yet. Right. Same.
And that's kind of what where this has already happened in Washington State. And that's what the realtors were telling us there.
Like, don't worry, nothing will change.
They were like, it's business as usual. And so it's just interesting how you're going to provide that cornerstone of information and education so that your seller isn't necessarily shooting themselves in the foot.
One thing that's different on the listing agreement, it used to have what is the total commission? So call it, say 6%. Of that total, and on several lines down, of that total, how much of it gets to go to the buyer's agent side? So out of 6%, it might be 3, half and half. Of 6%, it might be 2.5 and 3.5 because the seller's agent side has to pay for media and has marketing expenses, whereas buyer's agents, different depending. And so that is different now. Now it is, what are you paying the seller's agent? So instead of saying 6, you would say 3 or 3.5. And then there's a new line that's like, independent of that. Well, how do you want to incentivize, if at all, the buyer side? And it says nothing, exactly this much in a percentage or a number, a numerical amount, or we'll negotiate and it depends. And so we've had sellers since mark, and they mark it. They've had sellers since mark, we're paying 6, 3 and 3. And that was their decision before we didn't even negotiate. That was their decision. And but more commonly we're seeing, we'll see. We'll negotiate it, we'll see. And, so let's say all the houses on the street are selling for $1 million. All the houses are selling for $1 million. It's a cookie cutter street. And for whatever reason, these people come in and offer 1.1 cash, but they want 4% to their buyer's agent. You're like, sure, all day. Let's also say they're all selling for $1 million, and then China sends a bomb to Taiwan, and now you can't sell your home, it's sitting, and then an offer comes in at $900. You're like, well, I'm not paying any buyer's commission at $900. I would say if you don't have to sell your house right after that market collapse, just take it off the market. Don't sell it. That's actually the answer. Not whether or not you're going to pay commission, because the commission is so small that it's more of a decision, do you have to sell your house? What I told these sellers, because they gave that example, and he was like, you'd agree with me, right? If all of a sudden there's a bomb to Taiwan and we can't sell, then I'm not paying, right? Like, you agree with me, right? And I said, 90% agree with you. And he looked at me like, where in the hell is the other 10? And I explained to him, well, if you don't have to sell your house, don't sell it. In 2009 and 10, incentive to buyer's agents actually went up. Like, builders would actually pay more. Listing agents would be like, we're offering 4% on the MLS. You just bring us a buyer but those sellers were only selling because they had a certain need. It was maybe a short sale. The bank might have been offering more in a short sale. Like, let's get this off our books. So if you must sell, I'm not saying you must sell and say that the other side owes you a commission discount. I'm saying you might have to incentivize them even more. But if you mustn't sell, then don't.
Right.
Hold on to your real estate until the market's better. So,
what about on the buyer's rep agreement side?
That's a good question. So to that seller, because he's really curious and he wants to know, like, do you guys sign this agreement that says the buyer will pay you, right? And it's like, no, it says that the buyer will pay you if the seller doesn't.
Right.
But then there's a handshake that the buyer's like, here's my account. I'll pay you $5,000. That's it. And so up until this point, or I should say when all of this changed, it was we'll see. We'll see if we have to really come to the buyers and say, look, we're at the end of this process and seller's not paying.
Right.
But it just hasn't been the case.
Right.
Because, and I don't want to turn this whole live into this, so I'll get off of this soapbox. But yeah, the buyer's agreement does say, what it does is put a ceiling. Right. Actually. So if we put 2.5 on there and then they're offering 3.5, we can't actually get it. Yeah. And unless your brokerage, your entity that you work with, your EXP, your Remax, your entity allows you to cancel that agreement and revise and make a new one that's bigger. That's sketchy. So agents want to start high, and if anything, come down as needed, if needed. Right. But here's the thing.
And how long are those agreements being executed for?
Depends.
So that is literally open-ended. I've had buyers ask me that.
It could be for a single property.
Uh-huh. Oh.
It could be generally for a day or a week, a dating period.
Uh-huh.
What I tell our clients is Well, actually, we don't, because of this channel and the way we build trust, we haven't had to be contend with this much.
It's really different for most agents.
We do business entirely different, right? But if you're buying leads from realtor.com and you're meeting these people, they thought they were meeting the listing agent. Turns out they're meeting you. You have to convert and sell and build a relationship. Then that's a whole different process than they called you because they've watched you for a year on YouTube.
Right.
So it's different. But, you know, I'll be vulnerable. I'll tell a story. This one buyer came to us and we're supposed to set up a coffee in like the next couple weeks. Well, I never did it. It was right when I came home from Tennessee when my dad died. And I just put my head in the sand and I never followed up with him. When I caught my breath and I reached back out to him and said, hey, look, honestly, this is what was going on. I may have been too optimistic in telling you like I was good to go, but I am good to go now. And he had actually written an offer with another agent in the meantime. He's like, dude, I would have got started right away with you. But he also was like he wasn't, I'll say forthcoming, but he wasn't entirely like aggressive in telling me like, yeah, we could do coffee in 2 weeks, but I'm trying to write an offer tomorrow just so you know. And so for him, we said, look, we're going to show you a property and we'll do a single day thing for this property. But that's not how we do business. We're not going to do this like day by day thing forever. If you don't want to work with us, we can just call a spade a spade. But if you do want to work with us, look, we're back. We have Aiden and I helping you. Communication strong, as you can see. This is the normal process. So once you believe that this is normal, then we'll sign the full agreement. But we won't do this day by day forever. Yeah. Mm-hmm. And he was like, cool. He actually loved the directness. He's like, I love it. Thank you. Another thing, last thing I wanted to say, buyers have always paid all of the commission. Sellers don't pay commission. And people are like, what? But it says it on the paperwork. But remember, this is a house. You have lumber, asphalt shingles, copper pipes or plastic pipes, a concrete slab, electrical copper running through with insulation. You have that. You have no dollars. You have equity. You have potential money. You don't have actual money. It's like potential energy and kinetic energy. You have building materials and a deed, a title. That's what you have. When the buyer brings the $1 million that Jody got them to be able to borrow, now you have $1 million, and now you can reciprocate some. So you can incentivize and reciprocate. But if you look at that flow of money started at Pacific Rim Mortgage or in that buyer's bank account if they're all cash. That's where the dollars were before a sale happened. And so the flow of money goes like that, and then it comes back to the buyers and the seller's agent. So buyers always paid all the commission. I could say it jovially, like, I don't know why sellers are tripping. The buyers have always paid all the commission. And in fact, if you attach appraisals, have always included the commission amounts. So prices have always been inflated by about 5-6% because they appraised on a value that included commissions. So if you were to remove commissions consistently over time, it would make sense that values would drop 2 to 3%. It's just what it is. That's just math. That's not emotions. That's just math. Tell us about interest rates. So when I said, hey, what do you want to talk about? You said something like interest rates, the worst they've been or something.
Yeah, I said it's not what everybody wants to hear, but rates went up.
Yeah.
And it's not people, I am communicating with a lot of people that have been waiting for rates to go down since September. And I started talking to them in July, and they're like, well, I'll be waiting for September rate cut, and it's like, okay, but let me explain to you in July that these rates we have now in July are the rates that we are already anticipating for, September. And that's a concept that we cover on this channel like all the time.
All the time, yeah.
But so now, I'm talking to them again, and they're like, what do you mean rates went up? Like, rates just went down, and I'm like, yeah, the overnight rate that everyone anticipated and the market anticipated, that went down.
Right.
But that was already baked in. So people are getting a little, they're getting frustrated because it doesn't make sense. Even if we explain the whole baked in concept, they're like, yeah, but the rates went down by 50 basis points. Come on.
Well, let me ask you like a layman. Jody, I was waiting for rates to go down, and I'm not a lender, I'm not a finance person, but I saw all these articles, all these headlines that the Fed, whatever that is, the Fed said they're going to drop rates, and then rates went down. But you just issued me this estimate, and rates are high. How come? I thought rates were going down. Are they not going to keep going down or go back down? When are they going to go down?
So the trend is still down, which is like that's what I keep saying. It's like in the trend, as far as like looking forward the next 30, 60, 90 days, or let's say 60, 90 days, it's down. The trend is down.
If you look 60 days prior to today, it's up though, right?
Yeah.
Yeah?
Yeah.
But you think that over time we'll see this and it will be down over like 12 to 18 months?
Yes.
Yeah.
It'll be like.
And the chances on this small, like 0.5% up and down, up and down, up and down, it depends on the day and the week and the month you're writing your offers, right?
Right.
Yeah.
And so it's.
Everyone buying should be buying whether they caught a good 0.5% up or a good 0.5% down. They should be buying with like a 24-month vision of we're going to refi sometime in the next 24 months.
Yeah, like everyone that's buying is going to refinance in the future, whether it be 24 months, 36 months, 60 months. I mean, we don't know, right? Mm-hmm. But they will be refinancing unless you're like, our one client that's like, I've already paid off more than half the mortgage. I'm like, how?
Dang.
But, right, so in his case, he actually did call me because he wanted to refi. And I'm like, just keep doing what you're doing. I don't even want you to incur the costs associated with refinancing.
Yeah.
But so jobs reports and inflation and international. So, and the election. Those
jobs
are the big
reports, inflation, international climate relations, and our presidential election.
Yeah.
But I don't know if I just have Republicans in my feed, but this pretty objective, very smart, high-level guy went to this website that seems to be unbiased and predicts sports, predicts all kinds of things. Mm-hmm. And they showed that Trump in the recent weeks trended way up and is winning.
He's like winning by like 10 points or something.
A lot. So wouldn't you, in general, but I guess this is the thing about trying to figure out the Fed and what's going to happen. Because in general, you think the economy is going to get better when Trump's elected because people have confidence, like he's going to lower taxes, he's going to be good for business. But we're actually trying to contract. So that's why that's a bad thing? Is that why rates went up? Because we actually want jobs and everything to shrink and like, oh, shoot, we're going to get Trump. The economy's going to run wild again.
Right. So if inflation, if economy expands, which is the opposite of not expanding, I mean,
contraction.
Deflation, right? The cost of goods are going to go up. If the cost of goods go up again, now we're moving away from our target 2% inflation rate.
It's such a nuanced thing because then you see, people on the left be like, when Biden and Harris, the rates were only 5%. Now Trump is 6%. But then the people on the right will be like, our GDP was X under Biden and Harris. Now our GDP is higher. And it's most people don't know what the hell we're talking about, to be quite honest. And I'm not talking about me. You're a macro and micro, economic expert and international relations expert. You're all of it. But me, dang, I'm tired of trying to figure this thing out.
It's
but Trump,
mentally exhausting.
Trump might be good for the economy while that's bad for interest rates?
Because,
in theory?
Because the link is...
inflation and jobs.
The stock market. So the stock market and the bond market historically have an inverse correlation. Mm-hmm. So if Trump's going to be good for stocks, Trump's going to be good for business, stocks are going to go up. investors will move away from the safe bond market, which will make them less attractive and less demanded, which means in order to have demand for a bond, which essentially is a mortgage, you have to offer it at a higher interest rate.
Okay.
In order to offer it at a higher interest rate, you can't be selling a 5% if those bonds are only going to be demanded at 5.875. So that's the connection.
So principally, when you're making real estate decisions, and Kenj, I just logged into the live, so if there's questions or comments, you got to cue me. And if you guys have questions or comments, please put them in. Like, even if you're just going to say hello, that helps feed the algorithm, show it to more of our viewers and our subscribers who might be on YouTube. So drop us a heart, hello, hey Jody, like your jacket, something. Like I used to own one in the 90s. Something. So principally, when I'm making real estate decisions, it's rates may be up or down 0.5%. If for a lot of people that won't matter, buy the house and refi later, which I hate making it.
Yeah, because we don't want to be that pitch, right?
Yeah.
And so I've had literal numerous conversations of where I'm saying the same exact thing, and I'm like, listen, this is not a pitch. You're gonna miss your window, and I'm not saying it's not gonna come back around. This is for refi, right?
Yeah.
So I'm like, during that little blip window, I called 40, 50, 60 people just to say like, hey, now's the dip, let's do it. I don't know how long this is going to be around, but there's all these other things happening, the election, etc. Let's lock in and close, and now you just are at this better rate. And I'm like, and realistically, I was catching them before the September rate drop, right?
The 3-day dip.
Yes.
Yeah.
So, and they were like, well,
how long does it do? Like a buyer who has all their documents, or they just bought 6 months ago or whatever, how long does it take to refi? Like, do they need to get you new pay stubs and new everything?
So, we are like one of the top, if not the top VA lender. Yeah. So for that, there is a special program.
VA Streamline?
Yes.
Yeah.
So I don't need LES. I don't need pay stub. I don't need appraisal. I do need a credit report, but it's a special credit report. And even that is like not a full-blown credit report. So it's really like, I just need confirmation that where you are living and that you have been making your payments on time.
Right.
And we get to close.
Okay.
So
how about for conventional? How long does it usually take to do a refi?
Well, so it'll take 30 days to do a conventional refi, or maybe 25 to 30.
In here? Like,
Yeah.
in your, oh, wow.
But that's, people getting me their documents.
Dang.
So if someone was stalling on getting me their documentation, then we're not going to be able to close in 30.
Because so they're like underwriting and it's like doing another loan.
Oh, it's another
loan.
It's qualifications, debt to income ratio, income calculations, appraisal, market valuation.
So chances are those people who caught that window were VA, because everyone else takes too long. If it was such a short window. Yeah.
They were all VA, and they were the ones that were like, I trust you. They were like, if you're telling me it's right, let's do it, right?
Yeah.
And then the other conversation was like, I am not selling you on this. Like, this is firmly what I believe, and they could very, very realistically jump back up. And now I'm not going to say it's never going to happen, but now you just have to wait for the next one, right?
Right.
And so now they're all in that window, and they're all calling me, and they're like, hey, well, we're ready to do it now. And I'm like, well, it's 6%, brother.
Doesn't make sense anymore.
Like, you can't do it anymore, and that's
yeah.
frustrating. And it's a pitch. And that's what we were talking about, is because we don't want to do the pitch, and we don't want to sound sales-ishy, knowing all of our foundation of information and education and unbiased sharing of knowledge is buy.
I don't like
it's buy.
I have this client right now, and shout out to Robert, and he's like, we had a conversation, and he's like, why didn't you tell me this? I'm like, well, Robert, you were like, yep, nope, yep, nope, yep, okay, done, yep, okay. And he was like, no, yeah, I like it straight to the point. And I'm like, yeah. I don't like giving simple answers to complex situations, right?
Yeah.
I like a longer, but also some people either can't follow or don't want to hear this long, nuanced conversation. So that's an art and a craft, and trying to deliver really complex stuff in a simplified form in which we can. But the problem is I hate being in the same bucket as the people who simply say the simple things.
Right.
And our salespeople who don't understand the nuanced version, but the simple version gets them to the sale. We don't like that. And so, we adjust to the client. If the client wants it short and sweet, we try to do that. But some questions just don't afford a yes or no answer.
Right.
Or a simple, short answer. They afford, depends. Should we do X? Like if we're selling, should we counteroffer? Well, depends,
Right.
There's a risk to benefit analysis. Should I refi? It may or may not depend, or it may be super cut and clear and just yes, 100%, and you have a small window. But anyways, back to how's the year going to end? If you had to guess, and while she thinks about that, I'm going to tell you this too. If any of you have follow stocks or, follow it a little bit just because you have a TSP or a 401 or an IRA, you may have read a book from Tony Robbins or saw a podcast with him or, some of these famous investors. If you miss the best 10 trading days in a 5-year period or whatever, your returns could go from 15% down to 7% just because you missed those trading days. That's why the Vanguard index fund averaging over time thing, dollar cost averaging, has become so popular because people have understood that what are the chances I'm that guy or I'm that girl who's going to be paying attention, have the balls and the gumption and the conviction to make the big trade on the one day. Almost no one. The best investors in the world don't really do it. And so I use that example to say, don't wait to buy real estate and wait. Now, the chances that you refi to a better rate in some period in the future, I believe in you. I believe in us. We're good enough to do that. That doesn't take that much skill. Rates go down, she calls you, whatever the case, refi. But the chances that you're going to buy the house in the window, this last window was 72 hours. What's the chances the house you want is even available?
Right.
Or you had time to go see it and write the offer. What's the chances that you finish negotiating in that 72-hour range?
Right.
What's the chances the seller's agent isn't aware, rates went down, and I see your payment improved by $250 a month. Let our seller get some of that.
Right.
So instead of a $30,000 increase, we'll give you a $5,000 increase. You better hurry up because this rate is going.
Yeah.
What you want to do, buyer? What's the chances all the stars align and you have the conviction to make the trade on the right day? It's pretty low. So don't wait to buy real estate. Buy real estate and wait. Right. So if you had to guess.
If I had to guess, it's going to be lower than it is today.
In December. Is December. But here's the thing. In the holidays, there are a lot of jobs. There's temp workers. A lot of money's being spent.
Yep.
So the economy looks strong.
Right.
So would the rates go down? People know that's all artificial and temporary?
I mean, I don't. Yeah, I think all of that is factored in.
Yeah.
Yeah, all of that's factored in, and then I just am based on where we are compared to where we were, within the past 3 weeks.
Because she writes basic notes down about the market and the rates every day. So she looks at her planner and is like,
yeah.
3 weeks ago we were at 6%.
Yeah, so 3 weeks ago, almost a month ago, the VA rate was at 5.25.
But that was a small window, right?
Well, it was that was a small. I mean, it was 2 weeks. That wasn't the ultimate one.
Oh, the 5.125 was the
Yeah.
Yeah.
So.
But in that time, so I've been trying to buy houses.
See, the 5.25 was a good 30 days.
Good long, yeah.
Yeah.
Well, better chance that you and I make the decision in the 5.25 range. But also, the other competing force is I was trying to buy homes in that time. She gave me pre-approval, and we wrote offers in that time.
Right.
And it was competitive. And
it was
you could feel the market get more competitive. Were you guys issuing more pre-approvals in that time?
Yes.
And then they were losing, you issue another one, losing.
Yes.
So the market behaved a little 2021-ish.
Right.
In a month period because rates dropped.
Right.
So
it was almost like, it's like, how do people get it? How does the news get it so wrong? And then, but yet somehow people have a way of finding out, right? Because like at the time, it's baffling how, rates go down and then it's like mortgage rates hit an all-time high is like the headline.
Yeah.
And then rates go up and it's like, finally, the dip we've all been waiting for.
Really? Is
yes.
that bad? Is that egregious?
It's that egregious.
Yeah.
And I'm just like, who does this? How do we get it consistently wrong on like national things that, people see regularly? And then yet still the market finds out, right? The market finds out the information.
Right.
Of like, okay, no, we're talking a 5.25. Like we're talking, even for conventional, we're talking a 5.75. So let's get accepted and get locked in.
Yeah. And see, it's hard at that time. So let's say rates were 6, and then in a short period of time they go to 5.25. And I've been writing, an offer every week or so, every 2 weeks, and losing. I've lost out on 4. And then rates go, well, that may or may not matter. But let's just say I've been in the market, and then rates go down to 5.25. And now all of a sudden, I've been used to a stable 6%.
Right.
I'm used to certain market conditions. There's one other offer, but I've been, I've been kind of lowballing. I'm not telling Core Team Hawaii I've been lowballing, but me and Honey, when we're in bed at night, we've been kind of lowballing it. It's okay. But now the one you love is on the market and rates dropped. And now there's 10 competing offers and you have to go 50,000 over or something. It's hard to do that. It's hard to make that adjustment on a whim.
Is.
I myself lost out on 2 properties in the last several months because I was just like, I want to feel like I'm getting a deal. I'm an agent. I'm entitled. And I wasn't getting a deal. A similar anecdote of that. I see markets where VA assumable loans are more common. We're talking Eva Beach, single family homes, lower price points. Mm-hmm. The assumptions, the people assuming loans at 2 and 3%, those homes sell for more than the homes that sell with regular lending because there's value in getting a lower rate. So when the rate's lower, somebody's getting paid. They don't like rates are. We can charge more when rates are at 2% because it's better for you. So we charge you more. That's not how that works for them. Mm-mm. Me as your buyer's agent, I don't get to say, "Oh, the market's hot, so I'm charging you more." But the seller does better, and so somebody's getting paid when those rates drop, and it's typically the seller. And so a version of that are these assumable loans, where in the middle of a 6% market, people are getting 2%, 2 and 3% rates. And you see premiums attached to that. Why'd that home sell for $830, but the other home sold for $790? It's like, well, because the difference between 6.25 and 2.25, you can amortize it and see the math of, well, when do they make square on that 30 or 40,000? Mm-hmm. And over the course of 30 years, they do way better at the 2.25. Mm-hmm. And so when the rates drop, that's a big, long way of saying when the rates drop, the money finds itself to someone, and it's the seller, which means it's more expensive for you to buy when the rates drop. So that's a long, long way to say, marry the house and date the rate, as much as I hate to say that.
Yeah.
You guys left some comments. All right. Miguel Fuentes. Always love these live streams. You guys know your shit. NSFW. I'll keep it going. Insurance companies are killing us on the commercial side. Yeah, I mean, they hurt everyone. Residential side in California. Hawaii, similar in that. A guy that knows a little about a little bit about it. That's the name. Watching from Buffalo, New York. No desire to move to Hawaii, but your insight into market demographics is very informational. The world has enough agents that only show the positives and none of the negatives. Yeah, thank you for that. We love that. I want to know, how'd you find our channel? If you have no interest in moving to Hawaii, how does a guy from Buffalo find the channel? I appreciate it. Aloha, guys. Mahalo for the video. Ham Radio Live. It's Larry, by the way. Yeah. What's up, Larry?
Hi, Larry.
A guy that knows a little. Thanks. Nice to be here. Love Derek and Jody. Great people. Yeah. Now we're up to 42 people. So leave a comment. Leave a message. If nothing, just to boost the algorithm. Put a period. Put a dot and hit enter. Boost it up so more people see this. Give us more interaction. Let's go to the other question here. Brenda Wood, who typically pays for inspections, buyer or seller? Are you aware of any time, maybe like 2010 times, where a seller paid for inspections for the buyer?
Mm-hmm.
Yeah?
Yeah.
That doesn't happen very often in a normal market. I can see why it would happen in a really like buyer's market, really suppressed buyer's market. Now, what are some fees built into the contract? Home inspection or any inspections, any due diligence, you typically cost money. The HOA documents, which almost always the seller pays, but buyer wants to be aggressive and pay for them, they can. Cleaning, typically seller pays, or if you want to be competitive, you just remove it because it can happen in a day, the day of closing. Termite inspection is one where in the purchase contract it says who will select, which is the buyer. Seller never wants to select a termite company, too much liability. Turns out they said there were no termites in this house. Buyers move in, day one, see termites and droppings. Well, seller selected the company, lawsuit. You don't want to select the company. But customarily it has been that the seller would pay for that termite inspection.
Yep.
And for the repairs required. That's contractual. But buyer can pay for the termite inspection. But usually it's typically the sellers. Now, it's all about
for VA too.
Oh, and for VA. Because they can't.
Because they can now.
They can
before
now.
they couldn't.
Oh, okay.
So the VA kind of made that little adjustment, which is actually huge considering, VA doesn't usually make those kinds of changes.
They don't liberate the buyer.
Right.
To do what they want. Yeah,
right.
Yeah.
So that's been helpful because, they do want to strengthen their offer at times.
That's smart. They want to allow veterans to be as competitive as they want to be.
Right.
Yeah. I found out that I lost out on a home recently, and I think part of it might have been that I was using VA.
Yeah.
It was on the one who I had you call the guy, and I was pissed off. Yeah.
And then there's also the appraisal report, but that's not in the contract.
Have you ever seen a seller pay for the appraisal for the buyer?
I have, but
super rare.
Yeah.
Yeah. So I think there's another. The contract, you can manipulate the contract and do a lot of things and change the customary, path of money and payments. But typically inspections, to your question, Brenda, are paid by the buyer almost always. A seller would have to be in a lot of pain, a lot of days on market to pay for the inspection for a buyer. Yeah. I wouldn't, because if you're a buyer coming to sell, even if I've been on the market 150 days and you're a buyer coming to buy my house and you can't afford your own inspection or you won't pay for your own inspection, it's a big red flag to me, because we're not in a market where it's 2009 and they're doing anything to offload houses, and so that'd be a big red flag to me. I'd be like, I'm probably just gonna waste money. This person's gonna back out. So, and I was gonna say something about the financial crisis of 2008 and 9, anyways, and that was all of this interest rate timing. I think is twofold. I think one, people have FOMO from a few years ago with great rates.
Right.
They forget how competitive the market was, and homes cost more, but they still I want the rate my friend has.
Right. And and the cash component.
What do you mean?
People needed money. People needed downs. People needed.
The seller was getting, the home appraised at $1 million. The seller was getting $1,050,000. The velocity of the market was faster than the appraisers could appraise.
Right.
And so buyers are like 2.25 million, $1,050,000. I got 50 grand extra cash. $1,050,000, 1.1.
Right.
I got cash, and the appraiser's like, wait, $1,050,000, 1.1, and they couldn't keep up with the market. And so that cash, if the rates drop to 1%, the money finds its way into the buyers. Just don't get free rides because the Fed drops the rate. That's not how that works. But I think people think that's how it's going to work for them.
Right.
Yeah.
And it's just like you can't, for anyone who didn't have the cash,
you couldn't buy.
They never even had a shot. So they even, like, as supportive as we can be, writing the contracts, issuing the pre-approvals.
Yeah.
Ultimately you're putting 3% down on a required 3% down payment.
Yeah.
Conventional loan as a first-time home buyer, and you don't have any money if the property doesn't appraise. Like,
you're not going to be able to buy when the rates go down.
Right.
You just won't. I'll give you proof of that. There were agents I knew who just simply would not answer the phone or call back 0 down VA buyers in 2021. Just wouldn't, like, I know I can't help you, so why even engage? The conversation that I would have, and I say I because the team wasn't as robust back then, and I was definitely more front facing.
Yeah.
And so remember where Colina was with us, and I would say, look, I have to be honest with you about your chances of possibly even getting a home with 0 down on a VA loan. I know you're 15 years in the Navy, Coast Guard, Air Force, Army, Marines, Public Health Service, NOAA, whatever, the 7 uniform services. But you're not going to be able to, you're just not going to win. I can tell you, I'm a listing agent too on a lot of these homes, and I'm seeing 25 offers. I mean, people coming in all cash, 500 grand down, unlimited clauses to close at the offered amount. You have this 0 down VA loan that whatever it appraises for, that's it. Like, it would take something special for us to get you a home, or you'd have to be looking in like in the hood, or
right.
And I'm not supposed to talk about demographics, but I just said the hood, keeping it vague. There'd have to be a certain situation, or I find you something off market. So what I would say is,
Right.
We can start, but you have to be okay with if I'm slammed and you want to write an offer on this home that I almost 0 chance. In fact, I have my own buyer who's putting 500 grand down to buy it, and my friend who's an agent, their buyers are putting 400 grand down to buy it and writing higher than you can even get pre-approved for. You have to respect that I'm going to tell you, like, we can't show this one.
Right.
So I'd be real and honest and clear and transparent and thorough, and most of the buyers respected it. And some of them, we ended up getting homes, but it wasn't always the home they wanted at the timing they wanted.
Right.
It wasn't, do what you want. All right, let's go to love your videos. I've always said I'm going to retire in Oahu, but I'm getting impatient, and since I work from home, come on, let's do it.
Do it
Can
now.
you explain what happens when an offer is accepted, but the home appraisal report is less than the offer? Good question. Don't you ask about did you ask about an all cash transaction last week? I think I did. Don't remember. I have options for both cash and financing, hence the question. Cool. All right, deal. Mosa, we got you. You want to say what happens if it doesn't appraise?
Yeah, so if it doesn't appraise at the agreed upon sales price, there's multiple outcomes or next steps. Number one is that most logical buyer is going to say, like, well, I don't want to pay this much. And so they're just going to ask for the sellers to come down.
Yeah.
And what we like to get into from the loan side of things is, sure, you can ask, but the good news is, and you're going to know this going in, the good news is based on your loan structure, your loan qualifications, and the amount you're putting down, it is not going to have an impact on your loan. And all that means is it's not going to keep you from moving forward, even if the seller was to say, heck no, you already agreed to this price, we're not coming down. So it's either...
You get to buy it no matter what, assuming you have the finances to do so.
Right.
Appraisal short, that doesn't mean you don't get to buy it. Even for a veteran offers $1 million, appraises for $980. The veterans, the VA doesn't say veterans aren't allowed to buy homes for more than they appraise for. Like, it's your money. You can come up with the extra $20,000 and buy it if you want to.
Right.
Doesn't.
But the bank, obviously is like, we're going to lend based on the lower of either the sales price or the market valuation.
Right.
Yeah. So you're going to obviously try to get the seller to come down. And that has 3 potential outcomes, which is seller comes all the way down, which would be amazing. Seller says absolutely not. Or seller says, hey, it came in $20K low. How about if I meet you in the middle and I'll come down $10K?
Yeah, somewhere. Meet you somewhere, not appraisal and not list price.
Right.
Could be halfway in the middle. To Jody's point, the contract doesn't get canceled. The loan doesn't get, forbade. It's just that everything is based on that appraisal amount. Seller doesn't have to sell it to you. Now, and this is assuming there are no special terms built in to assume that the seller will drop if the appraisal is low.
Right.
Or that you will come with extra cash if the appraisal is low. In theory, I guess the seller could write in a counteroffer, well, if the appraisal is high, you'll increase your price. I don't really see that, but in theory, you could do that. You can write all these special terms. So what happens? The answer is it depends. It depends on if there were special terms, and then if there were none, it's a negotiation, and what are the seller and buyer willing to do, and who's willing to walk away at what point.
Right.
So it really just depends. Yeah.
I will say that in this past 6 months to a year, even though it's been difficult to get accepted offers, that we have seen a good amount of success in bringing down the sales price, not necessarily all the way, but some when the appraisal hasn't come in at agreed upon purchase price.
Yeah. Another thing. So there was this home that I'm interested in, and they listed too high. I mean high, probably $200,000 plus over. And I told the listing agent, I was like, hey, I'll write you a VA 0 down offer. And he knows exactly where I'm going. That means we get in a contract, we order the appraisal. Maybe I'm doing home inspections in the meantime, or maybe I'm writing it for a longer period to save my money. And then when their appraisal comes in and tells their seller, because the seller's agent also knows they're overpriced, when their appraisal comes in and tells their seller that they are overpriced, we'll see if the seller goes, all right, well, an appraiser said so
Right.
I'll lower my price.
Right.
That might be a creative way for me to get an otherwise very competitive home at, we call it an objective price. Now, if you do 5 appraisals with 5 appraisers who don't get to see the offer price, you're 100% going to get 5 different values.
Yeah.
I'd be surprised if one of them came in at the same as any of the other 4. But yeah, that's what happens. It just depends. And you asked about, if it was you last week or whoever asked about cash last week. Sorry if we didn't write that one down. Can you explain can you explain cash transaction? I mean, cash is just, you can close sooner, and you could in theory get rid of some things that lending otherwise wouldn't let you. Like the lenders need the HOA docs. If you're cash, you could forego them. The lenders are going to require their termite inspection. If you're cash, you could forego those. I don't recommend you do either of those things. It'd have to be like an investment purchase where you're buying you're buying it way undervalued, a really bad home or something like that. But we don't recommend you forego any of those things. And you could close as quickly as the 2 parties and the escrow officer want to work. I mean, probably close in 4 days if you really wanted to. But the escrow is probably going to ask you for 10 days at least.
10, I would say at least. Yeah.
Yeah. I've heard stories of people closing in 4, but not typically in Hawaii. Diane.
But wasn't there another part to the question?
Where?
What happens immediately after the offer is accepted? I don't see it.
Was there?
I thought you said that.
Oh, Oh yeah. What happens if an offer is accepted? But the home appraisal.
Oh, that was part of the appraisal question.
Yeah. It's part of the appraisal question. I will tell you one thing: when the offer is accepted, but the appraisal comes in low, typically the home inspection contingency is shorter than the appraisal due date.
Right.
So you probably would have already invested in a home inspection.
Yeah.
In rare cases where seller's been on the market a while, we know that, hey, look, I'm going to offer you this, but it may or may not come in. Like me potentially offering on this house, although it's not a long time on the market. We might be able to extend the home inspection period out. Our home inspection period is only triggered and only starts once the appraisal is received. So 7 days after receipt of appraisal or something like that.
Yep.
But that's more of a rare strategy. Ham is talking to someone else. What do you say? Diane, we took the leap of faith in core team and Jody from Pacific Rim Mortgage, ultimate professionals. Grateful to have Kenny working with us. You won't regret it. Is Diane? Is Diane in here? Or is DL Diane? Oh, I skipped it. Sorry, Diane. Aloha, Jody and Derek. Been watching your channel for a while now. Big fan. Thank you for sharing your knowledge about real estate on Oahu. Fingers crossed I'll be in touch soon as a buyer. Aww. Right on. Yeah, thanks, Diane. Hit us up. Shai Pualena. Aloha. Aloha, Shai. Derek White. Jody, nice to see you here.
Derek White?
Yeah.
Hi, Derek.
Spelled the right way, too.
Aww.
All right, I think we got a lot of information out, so I'm going to start to wrap this thing up. If you have any last-minute questions, comments, plugs, you just want to hit a button to gas us up. Oh, Kenji's telling me I didn't even do our flowers to our clients. So, our safe survey. So give our flowers to our agents. Acknowledge the positive feedback from our clients to our agents. So we have this thing called a safe survey. I've debated on what the acronym means. You know, I've pondered: is it special and fun experiences, safe? You know, but it's a survey to check in because I'm not working with every client every day. There's been times where we have 20-something clients all at once, and of course I can't juggle all those plates or spin all those plates and juggle all those balls by myself. So this is a way for my assistant to reach out, check in. Derek asked me to ask you these 5 questions that he's set up in this questionnaire, and I will report back to him. And it's an opportunity for clients to, if they need something, like, hey, I'd like to hear Derek's opinion on, X. I'd like to hear Derek's opinion on I'm putting solar on my home and should I do this or do that, whatever the case may be. And or just here's the feedback on the agent. So first one, Kenny from Natasha. He's been awesome. Kenny's been great at answering all my questions and everything in the process. He's been great. Awesome. This one is from Prem. We're really happy working with Mahe. She nailed exactly what we were looking for. The listings have been very appropriate. She's been available for asking questions. We don't have any questions yet, but the couple that we did have, she was on top of it. She's fantastic. All right, another one from Mark. All of the questions about her, my wife and I would say, are very positive. We met her for an hour in Honolulu. We asked her a number of questions, and she was very good. We had a good conversation. Aiden and Mahe. Aiden looks so like Aiden boy soft in this picture. Yeah, we'll have to update it maybe. I mean, it's good. It's not bad. I'm very happy that I'm working with them. They're doing an excellent job. That's from Richard. And this is our second transaction with Richard. They're so cool. They bought my car.
Oh.
Yeah, they bought my old car. All right. Aaron, regarding Aiden and Mahe, but a lot of flowers to Aiden. Give him top marks. Aiden has taken the time to walk through point by point every aspect of all the single page, probably every single page that we need to sign, especially the contracts. He walked us through and explained every detail to us when the sellers came back with a counteroffer. He walked us through where the commentary added was redundant. He explained everything to us, cleaned it up, and made it a much cleaner contract. We have taken the time we have taken the time day and night, realistically, whenever we needed. He was, we've taken, whenever he needed, he was, this is transcribed for my assistant, so bear with me. He was there, which is huge, especially when you're purchasing basically sight unseen from half the world away, not half a mile. Mahi is doing a great job. I laughed at Mahi. I was like, yeah, Mahi's all right too. Mahi's doing a great job, equally as helpful. Whenever we needed them, they've been there. They're both team players. Yeah, and the reason why Mahi had a vacation in between and the team dynamic stepped up and Aiden took the lead on this, even though you could argue Mahi is the senior agent, right? But Aiden's on top of his stuff too. And these are, go ahead.
Interesting about these buyers is that they were like a hard no for sight unseen.
Yeah, they were. Oh, that's interesting. Yeah, hard no for sight unseen. They had bought multiple homes in the past. They actually left the comments from this survey a couple weeks ago saying best agents they've ever had in multiple home purchases. I didn't know that they were hard no on virtual.
They were a hard no. That was my initial notes from our consult.
Yeah. Was
no, we're not doing that. We're not doing it. We have to get boots on the ground, and then all I did at that time was say, like, just to let you know, because they were in a time crunch. So I said, just to let you know, it's definitely one of Core Team Hawaii's specialties. They've done it more times than anyone that I know.
Maybe anyone.
In 20 years, really. Like,
the virtual purchasing.
A lot.
Yeah.
And so just maybe have a conversation with them about it, and then I think maybe less than 2 weeks for sure. Then it was like, okay, we might want to submit an offer.
Yeah.
So
we took,
and they didn't get their first offer.
Yeah. Shout outs to Kiana and Jermaine. Same. They were like, I don't know about purchasing virtually, but I was like, here's the thing. We'll send you some of our videos of other properties that we've sent to other buyers who are actively looking. Mm-hmm. And you can see the amount of detail and the amount of negativity and nuance and skepticism that we take these videos with on your behalf. Mm-hmm. And, you just let us know if you want to jump off the fence and jump in. And a lot of times the people who are like, I'm 80% no, I would say 70, even 80% no, they almost always turn into a yes. Because they're like, oh, this is like if I sent my actual husband out there to take a video or my actual wife out there, like they're talking shit about the cabinets and the this and the that. Mm-hmm. They've showed us down the street and what the neighbors look like. Oh yeah, this isn't like your typical realtor. And so, yeah. All right. Any more comments? No comments. Thank you guys. Go to coreteamhawaii.com. You can lead into our YouTube. You can go to the very bottom, fill out the contact form, and let's get you guys hooked up. If you need to sell a home, you might look 2 or 3 weeks back, our listing video, we're showcasing this home, and pretty soon you're going to find the result, how competitive it was, how strong the offer was, how, everybody's happy, everybody's winning. If you want to sell your home on this channel, go to coreteamhawaii.com and fill out the form. All right.